For decades, lasers were the stuff of science fiction. We saw them in movies destroying asteroids and battling spaceships. Then they became mundane, tools used for cutting metal in factories or scanning barcodes at the grocery store. But right now, in 2025, the script is flipping back to science fiction. Lasers are becoming weapons. They are becoming the engines of advanced 3D printing for rockets. And sitting at the intersection of this technological revolution is a company called nLIGHT. Today, we are doing a deep dive into nLIGHT, ticker symbol LASR. We have analyzed their financial history from the uncertain days of 2020 all the way through their latest explosive quarterly reports in late 2025. This is not just a story about a laser company. It is a story about a massive strategic gamble. A gamble to leave a massive commoditized market and bet the entire company's future on high-tech defense and aerospace. And the data from 2025 suggests that this bet is finally paying off. Let's rewind to the context of 2020 and 2021. Back then, nLIGHT was heavily involved in the industrial market, particularly in China. They were selling fiber lasers for cutting and welding. It was a Havalian business, but it was a brutal one. Competition was fierce, prices were dropping, and margins were shrinking. The management team saw the writing on the wall. They realized that staying in a price war with commoditized Chinese competitors was a race to the bottom. So they made a bold decision. They decided to execute a strategic pivot. They began to deliberately reduce their exposure to the low-margin industrial markets and redirect their resources toward growth markets, specifically aerospace and defense and additive manufacturing. This transition was not painless. If you look at the 1OK filings from 2022 and 2023, you see the friction. Revenue growth stagnated as they shed their old business faster than the new business could ramp up. Stock price suffered. Investors were skeptical. It is what we call the valley of death for a transforming company. But then came 2024 and, more importantly, 2025. The fog began to clear. Let us look at the hard data from the 2025 earnings presentations we have in front of us. In the first quarter of 2025, nLIGHT reported revenues of $51.7 million. In the second quarter, that number climbed to $61.7 million. And now, looking at the Q3 2025 report, revenue has hit $66.7 million. Do you see the trend? This is not just stabilization. This is acceleration. Sequential growth quarter over quarter, but the top line number is only half the story. The quality of that revenue has fundamentally changed. The driver of this growth is the aerospace and defense segment. In Q3 2025, this segment alone generated nearly half of their total revenue. Why? Because the world has changed. Geopolitical tensions have forced governments to modernize their arsenals. nLIGHT is a key player in directed energy, a polite term for laser weapons. Their high-power semiconductor lasers are being designed to disable drones and missiles at the speed of light, costing just dollars per shot compared to million-dollar interceptor missiles. Furthermore, look at their gross margins. In the commodity days, margins were always under pressure. In Q3 2025, nLIGHT reported a gross margin of nearly 36% as they shift more mix towards high-tech defense products and specialized commercial applications. Their profitability profile improves. They are no longer selling a commodity. They are selling a unique technological capability that is hard to replicate. Another critical pillar is additive manufacturing, or industrial 3D printing. nLIGHT's programmable AFX lasers allow manufacturers to 3D print metal parts for rockets and jet engines with unprecedented speed and quality. This isn't just prototyping anymore. This is mass production. Financially, the company has maintained a disciplined balance sheet. They have navigated this transition without drowning in debt. They hold a healthy cash position, which allows them to continue investing in R&D. And R&D is their lifeblood. nLIGHT is vertically integrated. They don't just assemble parts. They make the semiconductor chips, they draw the optical fibers, and they build the final laser engines. This vertical integration gives them control over performance and costs that their competitors simply don't have. However, no investment is without risk. The defense sector is lumpy. Contracts can be delayed by government budgets. The commercial industrial market is still, but the 2025 trend line is undeniable. The strategic pivot is no longer a plan on a PowerPoint slide. It is a reality in the financial statements. So What is the verdict for investors? nLIGHT has successfully crossed the chasm. They have transformed from a component supplier in a price war into a strategic defense technology asset. The sequential growth we are seeing in 2025 signals that the new growth engines directed energy and additive manufacturing are firing on all cylinders. If you believe that the future of warfare involves lasers and the future of manufacturing involves 3D printing metal, nLIGHT is the potential play for that future. The painful transformation is behind them. The growth phase has begun.